Coming to that of the levels in which the currencies are expected to swing, euro could form the low as 1.0850 and the high could be 1.1225. Not much of a high level might be seen in this week. Then GBP could go down to 1.27 area, and then the high could be 1.3075. When they are holding like this, they only make a stop end of a brief upward move above that of the initial high. Then in the case of yen, they are expected to make either way moves. Similar to last week, they could come down to 110 and then start gaining the levels. Then in the case of CHF, from 97 area, they are expected to go to 99 area. In the case of Canadian dollar, from 1.36, they are expected to come down to 1.32 level. Australian dollar from that of 0.74 to 77 level. So when euro and GBP are making the slide, USDCAD and Australian dollar are expected to make the USD weakening move. As you have seen last time, that when euro and GBP were at a lower level, when they are becoming stronger, Australian dollar and Canadian dollar were making USD gaining move when euro and GBP are making the USD weakening move. Similarly, you'll come across euro and GBP making the USD gaining move. At that time, USDCAD and Australian dollar are expected to make the USD weakening move. So this is how they make it in order to handle the crosses. So that we need to understand by reading the market using the live market quote page. In the live market quote page, you can see easily that euro, GBP, and Australian dollar are showing negative net change. USD and USDCHF and Canadian dollar are showing USD positive net. Showing the positive net change. So when the numerator showing negative net change, the denominator showing the positive net change, it is a USD gaining move. Slowly, they will try to bring in the contrarian move by making some currencies USD weakening, certain other currencies USD gaining. That sort of moves they are expected to make in order to handle the crosses. So that you need to understand before taking the position. Coming to that of the market reading, I have noted down the initial lows and the highs around 3:30 GMT. And currently, if you look into that of the market, euro formed the low 1.1183 and the high was 1.1210. They not breached the low or the high. Then GBP 1.2975 is the low, 1.3026 is the high. They not breached the low or the high. So it has made more than 40 pips spread. So they are likely to come down in the case of GBP first, because that is making more negative net change when compared to that of euro and Australian dollar. Then USDN 111 is the low, 111.61 is the high. Here again they have made the spread more than 40 pips, and they are likely to make a small dip and then gain the levels in the case of USDN. Then CHF 97.25 is the low and 97.47 was the high. They just breached the high and went up by 1 pip, and holding below that, they are expected to gain the levels in the case of USDCHF. Then Canadian dollar 1.3510 is the low, 1.3541 is the high. They not breached the low or the high. Australian dollar 74.35 is the low, 74.58 is the high. They are not breached the low or the high. So in all the pairs excepting USDCHF, they are not breached the low or the high, indicating that the traders are expecting the trend to be set before making a commitment. And you know pretty well, the players create the market sentiment and induce the traders to commit positions and make opposite move to trap and earn money from them. Then the recommended trades for you. When they make a brief downward stop of about 50-60 pips, in the case of euro, you try to take a buy. And similarly, when they make a brief upward stop and take a sell, then keep the hedge order to limit the risk. You will be able to see nice profit during the day. Similarly, in the case of GBP, when there is a brief downwards, when there is a downwards extended stop and you try to take a buy, then when they make a brief upward stop and take a sell, either way you can do it. Whichever comes first, you can take the position. The other side, you try to keep it as a target.